Okay, now the continuation of the external financings. One by one, from the very beginning, will go on. Online lecture series number 14. Okay. We have briefly touched business angels, okay, from the beginnings. Business angels is originated in the United States. US peoples are very much something like adventurous peoples. Okay, that's why to America, most of the ambitious peoples emigrated to the America. So therefore, basically, their national character is taking a risk. So, if someone has the good ideas, then there are peoples, okay, I have a small amount of the money. I can loan you some small amounts, not big amounts. Well, that is business angels. Well, high net worth individuals. Well, some people's I have say 10,000 rupees, even 100,000 rupees. More than 1 million rupees, well, a little bit reluctant, but up to 100,000 rupees. All right, it may be okay. This is something like a 1 month's salary. So therefore, even though I invest this 100,000 rupees as a risk money, well, it's something like enjoying the gambles. Okay, so that is a business angels. Increasingly important source of funding for small firms in the United States. Well, each 100,000, but what happens? These people gather together because of the internet connections. 1,000 people. In the United States, there are big cities, 100 big cities. Each cities, maybe about 10 people, 20 people, they are adventurous people. Well, what happens? Maybe 1,000 people gather together. Each, they have spent 100,000 rupees, which means something like $1,000. But $1,000 multiply 1,000, well, how much is this? 1 million. Well, rather big amounts. Okay, so increasingly important source of funding for small firms. All right, make an average of 2 investments every 3 years. Well, every 3 years, well, maybe about say 2 investments. The average happens. So each one is a very small, but the other one is a very big. So average is reasonable amount. 90% are satisfied with their investments. Well, this is rather surprising statistics. Well, they are 90% are satisfied. The investments. I don't know how many years, how many months they could repay their investments. Well, even though they are 90% satisfied, they are happy. So angels funding is now increasing in the United States. Okay, they provide not only finance but experience and business skills. Well, for example, one of the newly graduates of Harvard Business School, he has enough knowledge about the business management, business economics. Why not use his knowledge? He has more amounts of the money. Well, why not invest $10,000, $20,000, and also he can provide his expertise, is enjoying. Okay, so that may happen. Business angels invest in the early stage of business. It's a very early stage, the budding stage. They will join. Sometimes becomes very successful. For example, Microsoft or say Yahoo, when they started, nobody did know the present days were Apples. So much big companies now. Well, the initial investment joined as angels, they got a huge profits. Okay, of course there are certain failures, but there are also success. Now, business angels is coming small sums, normally 100K, which means normally less than $100,000. Okay, a network of informal investors. Well, these days network is well advanced. There are e-commerce is well developed, all right, and sources of finance, and then the company becomes growing, then there are venture capitals comes and business grows. Okay, so this is the threshold. So therefore, once you are started and then more prospects for the success, then the venture capital comes. Okay, I'll explain about what is the venture capital. Venture capital is normally, generally speaking, larger sums, $100,000, which means $500,000. Okay, they will provide you expertise, longer term involvements, high growth businesses. Okay, now starting from your own money, friends, families, then collecting the money from angels, and then growing, and then venture capital will approach you. Venture capital is something like an institutional financing. It's not a bank. Well, venture capital is calculating their own risk. Well, venture capitals, of course, if the business is successful, and then they can enjoy good dividends, and if you loan them, then you will get good interest rate. But at the same time, maybe you have heard about this IPO, initial public offering. Okay, which is when your business became very successful, first time you will list your company in the stock market. Then the stock market thinks this business will be a very high potential. Then the stock price will skyrocket, go up. Right? And then these venture capitals, initially they invested as equity owners of this company. Then they will sell their stocks to the stock market, and they will get huge amount of the profits, okay, by the IPO, initial public offering. So, for example, in my case, when I joined my company after, say, more than, say, how long years ago, 60 years ago, I joined the company. That company, when they first stock market, their list price of the stocks was only 50 yen. But when they listed in the stock market in Tokyo, my God, that became 3,000 yen, more than that. Well, it's a huge amount of the profits. Okay. Those days, venture capital was not available in Japan, but in the United States, it's venture capital. So there are venture capitals are expecting high interest rate, high risk, but high returns. But at the same time, when they list their stocks and IPO, then they will get it huge amount of the profits. This is the two sources of the venture capitals. Okay. Now, venture capitals is funding investment in specific industries. Each venture capital, they are favorite industries. Some venture capitals, they are very much skilled knowledge in certain specific industries. Buys normally between 20%-40% of a company, but in some cases will buy up to 70% or even more. That is equity portion, company ownership. Okay, normally 20-40% of the company's equity they will invest. Sometimes up to 70%. Take high risk. Okay. Long range fundings. Normally venture capital, they are looking about 5-10 years ahead. That is average. Well, this venture capital is something like a bridge funding between the entrepreneur's personal sources and the stock market flotation. Eventually, your company became successful. Your biggest source of financing is stock market. Okay, to get enough stock market financing, you have to establish your company's reputations. So unless you will establish company reputations in the stock market, they need certain financing. So therefore, venture capital is somewhat between bridge funding between entrepreneurs' personal sources and the stock market flotations. Maybe you can understand that. Well, bankers are always comes in, sometimes short term, but bankers are not taking a risk. Okay, this is the venture capitals. I'll stop it here. Next course lecture, I'll go in further in the financial side. Okay, thank you very much.